But let's get a move on then and focus in on an individual corporate. Bajaj Corp is here to talk to us about the kind of recovery that we've seen in the quarterly numbers, the new volumes, the new product launches aiding volume growth, as well as the margins. Let's connect then with the management who is with us at this juncture. We have Sumit Malhotra, who's the Managing Director, Bajaj Corp. Good to have you on board, Mr. Malhotra. Now, second quarter that we're seeing double-digit growth, this is, been a follow-through. Can you tell us what exactly has been aiding your overall volumes?
Like I've been speaking to all of you, that we are primarily a hair oil company, and therefore the growth that you see over the last 2 quarters is a direct reflection of the hair oil industry growth coming back. And actually last full year, financial year, the value growth of the hair oil industry has been over 17% on the back of a 8.7% volume growth. And these numbers are very different from what we have seen over the last 3 years, where the overall hair oil growth itself was muted. And I think our good performance over the last 2 quarters has largely been on the back of this, and also the initiatives that we have launched in terms of communication as well as distribution across India and in the international business.
Now, you have taken a 4% price hike in order to mitigate the increase in raw material and packaging costs. Is that going to support your margins? Can you tell us what has been the overall margin trajectory and the outlook here?
See, margin over the last full year and even before that has been quite steady. We still have around 67% gross margin, which is very healthy. The crude prices actually went up, and though we had stocked enough to take us into February of last year, we saw that the crude prices were not going down, and therefore LLP prices continued to rise. To accommodate that, we had taken a price increase late March, so you'll probably see the effect in April, May. There will be a marginal increase in the gross margins, but not a massive increase, because we are now buying new price stock which is at a higher rate than what we bought last year same period.
The peak expansion what FMCG companies have seen because of GST rollout, do you think that is behind us now? Margins for across the board industry industry companies have improved. Do you think now you've hit a glass ceiling?
Yeah. Gross margin is one because of whatever the macroeconomic scenarios, which is basically, it could be because of the taxation, it could also be because of the competition that is there, and if there is a weak environment, then there's down trading and therefore margins also fall. The other thing I believe is this year you will see expansion in gross margins, not only because everybody's got sort of aligned to the GST part of it, but I think inflation is under control, and therefore a little bit of premiumization will also happen, which will help the FMCG industry gain margins.
Minus hair oil, what is happening to your other businesses, especially the cream business and skincare business?
The skincare business has also done well this year, and if you look at our numbers, we have ended the year with a 27% growth in the no-marks business. The last quarter was even better. So I think we are now getting to terms with how to manage that category, and even though the category is growing even faster than the hair oil industry at 21% by value, we are growing faster than that, and therefore gaining market share within the anti-marks category. All in all, I think the experiments that we tried over the last 3 years are now yielding results, and we have got our understanding of the category much better now by going to the consumer and also studying the competitive landscape.
I just want to understand this entire fear of Patanjali which we had couple of years ago. Everyone was convinced that Patanjali is going to just change the dynamics of the toothpaste to the hair care to the FMCG market. But suddenly that entire disruptive fear from Patanjali has died away. What's happening there?
I really don't know too much about what's happening in Patanjali. I can actually look at the company from outside, and what I can tell you that it started its growth on the basis of two platforms. One was the Ayurvedic or natural platform. The second one was on price, and therefore each product they had a disruptive price. Now, unfortunately, as they went along, I think somewhere along the way they lost this whole platform of Ayurvedic and therefore good for you, and it became purely a price driven game. And like any consumer will tell you that price has a positive and a negative side to it. The negative side is basically low price product is also seen as inferior quality, and thanks to the massive growth that they got, they were not able to look at the quality that seriously. And what you see happening with Patanjali now is that the original theme of what they launched and where they got their growth from, which was natural, Ayurvedic, good for you, somehow got diluted over the last year.
Right. We also, can you just tell us a little bit more about the response for the almond cool oil as well, and how is that going to really contribute to your overall sales?
See, unlike Nomarks, which is in the anti-marks category, which is just around 350 crores, cooling oil is a much bigger category, and therefore getting a foothold there will help us move the needle a little more significantly. This time, it's the first time we have tried extending Almond Drops, and what we have done is we have actually launched Cool under the platform of Almond Drops itself. And what we are saying is, this is a cooling oil, but it's got the benefits of being light, and therefore normally the harshness or the heaviness of a cooling oil has sought to be sort of negated with this kind of oil. It's gone out well, but I think the offtakes are yet to take off. I think you would be aware we have taken Jadeja as the brand ambassador, and those ads are already on the air, but offtake is yet to be significant at this point of time.
Okay, that's the take coming in. And finally, before we let you go, can you just give us a sense as to what is going to be your overall trajectory in terms of revenues as well as your capex plans?
See, I've been repeating this. We normally as a company don't give guidance, but I think I can safely say that this year in terms of value and volume will be much better than last year, because one, definitely we are much more focused, and the initiatives we took over the last 2 or 3 years in terms of manpower, processes, automation, innovation, all of that will yield much better results this year. In terms of capex, there's going to be hardly anything. There's just one small amount that we will be having to spend on beginning our corporate office in Mumbai. That will also start in the second half of this year, and therefore the main load will not come in this year alone. So capex is not significant in my opinion. In terms of trajectory, I think you can look at a positive growth, both in terms of market share, volume, value, growths, and maintenance of profit.
All right, let you go on that note. Appreciate you taking the time out and giving us an overall view on the earnings.